Hey everybody, this is Richard, and the purpose of this video is to get caught up on the weekly videos, which are anything but weekly these days. But this video is going to be covering the trades from the 5th of September all the way through the 24th of November. Now, as this chart shows, we actually have had a pretty good run. So we had 9 put spread trades. 3 of them were losses, 6 were winners. And on the day trades, we had 13 trades, 8 were losers, and 5 were wins. But what I'll show you is that the wins were quite a bit bigger than the losses, which is one reason why we were so profitable. But all in all, in this sequence of a couple months, we were up about $3,645 per unit traded, which is about 24.3%, and that's assuming a $15,000 unit size. So let's go ahead and look at a few of the different trades that we had. So the first thing I'd like to look at is from this chart here. This is just the chart of the S&P E-minis, and you can see way back here is September, and so the start of this video, or the start of what we're covering, would be from about this point all the way through the 24th of November. So one thing you'll notice is that in the month of September and also in October, we had very few trades. And as you know, if I zoom out a bit, and I've covered this in the other videos, but as the market goes higher, the Geronimo options will place a lot of option trades as it goes higher. As the market rolls over, kind of like I covered in the previous video, a lot of times we take a hit, and that's because these are momentum algorithms, and it takes some time for the algorithm to determine that the market will be going lower. But once the market does start to go lower, then it's pretty good at getting out of the way, like it did in October, and also, in September, and also the beginning of October. Now, once the market rallied in October, we eventually started getting back in, and that's why we had those positive put spread trades that I mentioned at the beginning. But let's go ahead and look at some of the day trades now. Okay, so this is a chart of the S&P E-minis. Now we're looking at 9-minute candles though. What I want to show you is there's really 2 trades that we had that really were pretty incredible. One of them was this day trade that we had on the 10th of November, where we bought at around, let me zoom in a bit. Let's see, 38.91 is where we bought, and we held the entire day, exiting at the close at about 39.65. So this was actually a pretty big day for us, and that's typical of the day trades when we have a winning trade. A lot of times it is a pretty big winner. So what happens is, as you know if you've watched these videos, is it will take different chances at the market by buying the market at the open into strength. A lot of times it'll get stopped out for a small loss. The loss ranges between $350 and $400 usually when you count for slippage, but the nice thing again is that when it's right, it tends to do really good. And so here's another stop out that we had. The win rate actually in the back test on this one is about 50%. But all in all, this is one of the best algorithms that we have. And so yeah, here's the other trade I was looking for. So this one was on the 9th of September. And this was just another really good trade. This one ended up being a little more than $1,000 gain. But again, definitely better than having a losing trade, and it's what sort of adds to the results when you look at the entire system combined. Now this is the day trade short algorithm, and what it does is it'll kind of do the opposite of what the day trade long does. It'll short into weakness. So on this day, the market gapped lower, and then it sold off for the first 20 minutes. We ended up going short and held on the entire day and exited at the close with a pretty solid gain. The stop on this one is about $500. In fact, here's an example of another short trade that got stopped out right here. And then I believe if we go back a little bit, you'll see another short trade that we had, yeah, right here. So this one, similar thing, but what it'll do is once it's up by around $1,000, it'll move the stop to break even. And so this was really the break even stop out that it triggered. And I think that sums up what I wanted to talk about, but just remember that past performance is not indicative of future performance. Trading futures and options does involve substantial risk of loss. It's not appropriate for all investors. In other words, this is not for everyone. As you guys know, as my customers, there can be a lot of ups and downs, but overall I'm really encouraged by the way Geronimo kind of pulled out of the drawdown that it was in. And we still have a little bit to go to claw out, but I think we're getting pretty close, so that's definitely good news. And if we look at this bigger picture of it again, you see that really since the time of the last video, the 5th of September through now, the market has sold off and then rallied, but we're really kind of break even. So the fact, or at least the S&P is maybe up slightly, but the fact that we're up a decent amount, even though the market has for the most part gone sideways, is a big positive. So thank you so much for watching though, and have a great day. Bye-bye.